Hello and good morning, listeners. Welcome back to Almus Market Mornings, rounding up the global financial updates for you with Jayaram Krishnamurthy. For listeners, the Asian currencies continue to slump as majority of these now trade close to their key levels. Japanese yen has weakened above 160. CNH also traded above 7.30 against the dollar, while having the highest gap between the traded prices and the fixing prices in the last few days. And even though the Asian currencies weaken, Indian rupee also bearing some brunt, but the FPI seems to have put Indian stocks back in their shopping list, pouring in $3.7 billion in the last 12 days. And so, if we have to talk about on the global front, on the contrary, shipping costs looks to have tripled since the beginning of 2024. So there's a lot of mixed set of developments going on. JK, what is your take on the current financial market?
Good morning, Shikhar. Yeah, but I think it's all mainly headlines is only dollar story, renewed strength of the dollar, and the ease with which is the USD yen has broken above 160, a much touted resistance level, and also where the market broadly expected Bank of Japan to intervene, really not materialized. So we have had a very smooth break through that level and comfortably sitting there 160.50. Uh, I'm sure the Bank of Japan is not happy about it, but then they are also aware that they don't want another failure of their intervention. They are probably waiting for the US PC data tomorrow and hoping that it will be weaker and then the dollar can fall, and then along with that they will do some action. Otherwise, there is a prospect that one more intervention failure would take the dollar yen back to, I mean, higher to 165. Just to give you a perspective, dollar yen was trading at 102 odd just in 2021 January, and we are now at 160. And that's a massive 55 plus percentage of depreciation, broadly driven by their own policy, negative interest rate, and then massive printing of yen. But now they have to contend with their own policy, how to control the same. Yeah, the yen movement not only impacted the other Asian currencies, but also emboldened the other European euro traders, because the eurozone problems are not going to go away in a hurry. The kind of election prospects, the election polls that suggest that the far right may be winning as much as 36% of the votes, and even the left could be making some good inroads. So the Macron's group is likely to lose a lot of hold on the policies, and while there is no extreme stand of leaving the Europe or anything like that, but there will be a lot of changes in the approach from France. And this is also coming at a time when the Germany, the other big country in the region, is also not having a very strong political setup. So euro is also under pressure. Perhaps now waits for some data from the US, as well as the weekend election, first phase of the election. Then, of course, the Chinese markets are continuing to sell the yuan because the interest rate differential between US and China is one of the widest after Japan. And the US yields yesterday also took a big swing up, not because there was any major strong data from US, but it also got triggered when Australian CPI was announced, and the inflation went up from 2.6 to 3%, well above expectations. And just before, even the Canadian inflation had gone up. So there is a fear that even US inflation, any drop may be temporary, and the inflation remains sticky. Therefore, Fed's current stand of only one rate cut this year may be still the reality. Therefore, markets are happily buying back the dollars, and the overall strength on the dollar is clearly visible in the markets. Yes, as you said, rupee has been supported because of a central bank policy of keeping it in a stable position, and the renewed interest from FIs, who are seen acting with FOMO now. after the election results and formation of what is considered as a stable coalition government and continuation of policy. So this possibly will be supporting the dollar or rather the rupee on any weakness. So I don't see rupee participating in this particular phase of a dollar strength too much. But then if there is a more precipitating fall in the Asian currencies, then we could probably see some more weakness in the INR towards 83.70. On the economic data side, yesterday not much significant data was published, but then there was the interesting study, or rather the bank stress test, which annually Fed does with the banks, came out with good result, in the sense they assessed that most of the banks are well capitalized and are in a position to withstand any big losses. Up to 650 billion is what the number they are saying. Even if that is there, banks will be able to withstand and they'll survive with good capitalization. So that was some comforting news for the banks, and markets of course are now waiting for the US GDP data today, which was downsized to 1.3% from 3.4% in Q1 second estimate, and the PCE number tomorrow. So markets have reasons to be on the sidelines for today, and then maybe pick up action from today later as well as tomorrow after the PC numbers, definitely. Yeah, thank you.
Okay, JK, that was pretty good. And yes, folks, although there has been no material intervention by the BOJ, a massive 55% depreciation in the JPY from 2021 has kept the central bank on the hooks, and they now wait for a better opportunity so as to not fail with their intervention. On the domestic front, yes, the stable policies by the central bank and the FOMO of the FIIs have kept the currency relatively stable compared to the Asian peers. But it needs to be seen if there's a heavy precipitating fall of the Asians, then we can also see some bit of action coming in the INR. On the global front, we have the US GDP data today, which the market awaits, but it needs to be seen whether the core PCE will bring in a major shift in the beliefs for the market participants as the inflation continues to remain sticky over other economies as well. Lastly, as we close this session today, folks, as I mentioned yesterday, there's a cracking session lined up for you today evening at 6 p.m. Request you all to join in because we have the experts coming in and giving their opinions and their views on the Indian macroeconomic situation as well as the Indian markets. And it's going to be a good cracking session. So see you all there. Thank you so much for joining in today. That's it for today.